The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Jamie in New Jersey. Hey, Jamie, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
Always. It's a great day.
Cool, man.
Hey, listen, I just want to tell you, I've called in rarely in the past. I really enjoy listening to your program. I came across it about 10 years ago.
Wow.
Bought both your books. They've completely changed my life as far as trading and understanding why the markets do what they've done or do what they do. And, I just want to let you know, appreciate everything you've done for everybody who listens to you.
We appreciate you growling and prowling with us, man.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the thunderous Thursday, November 8th edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away celebrating a birthday. This could be long birthday weekend celebration for Tom, so I know everybody out there celebrating with him. I believe his actual birthday is tomorrow. Maybe we'll sing him happy birthday tomorrow. For those of you not familiar with me, I kick things off for TFNN each day, 9 o'clock. You can always catch my shows live if we're not on a radio station near you. Just simply tune in to TFNN.mobi. You can always watch archives of my show on Channel 9 on Tiger TV. Tiger TV is a great way for you to be able to learn what it is that we're doing. We're certainly going to be taking a look at charts here as well. Tom and I also are partners at Tiger Metal Exchange, so if you're looking to convert any of your jewelry to cash, or maybe you want to buy some gold, silver, platinum, you can give us a call at 866-618-8888. And let's go, folks. I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools so that you can lead an inspired life. Let's go take a look at one of these tools. I love this tool. This is the tool that I call 4 to Score, and it's really all about experience. So 4 quick things when it comes to experience out there. Take time to gather up the past so that you'll be able to draw from your own experiences and invest them. Invest them, folks, in the future. Don't let learning from your own experiences take too long. If you've been doing it wrong for years, I would suggest that that's long enough. Be like a sponge. This is a good one. I want you to be like a sponge. Why? Because I want you to be like a sponge when it comes to new experiences, because if you want to be able to express it well, you must first be able to absorb it well. Don't be a prisoner of your past, folks. Be a pioneer of your future. Let's go take a look at these markets. Again, it is Thunderous Thursday. We had the Dow close down 121 points, closing out at 12,811. Next stop on the choo-choo train for the Dow looks to me like it's about 12,656. We'll look at that on the markets. The S&P closing down 17 points out at 1377. Its next stop looks to be 1346. The NASDAQ off 40, almost 42 points here today. Down at closing out at 28.95. Looks like 28.27 is on its horizon. The NDX off 40 points, mostly because of Apple, Priceline, Google, all three of them down. The NDX closing out at 25.72. 25.20 is on its horizon. The Russell 2000 off 11 points, closing out at 793. That looks like it wants 10 points lower, right around the 783 mark. New York Stock Exchange, we're going to look at that today for sure. That's been the strength of the marketplace, down 87 points, closing out at 8,051. Its next stop looks to me, we'll go take a look at it together. We'll look at patterns out there. Looks like the next stop, 79.33. The transport's off about 49 points, closing out at 5,054. Looks like they want the magic number of 5,000, 5,001. Right around there, we had gold. Gold up 18.50 right now, out at 17.32. Looks like gold wants to make a run to the 17.50 level. That would be the next step. Silver up 73 cents right now, trading out at 32.40. Looks like silver wants to make its way to the 33.61 mark. Again, our call number 877-927-6648. Let's go start with the S&P 500. The S&P 500 yesterday, as it came hammering down, what stopped it, or what seemed to stop it, was the trend line going all the way back to October 4th. If you're watching on Tiger TV, or maybe if you're listening on the radio, you can do this on your chart at home. Just simply go to the low of October 4th. In the S&P, you're looking at 1074.77. The next line This is a trend, an uptrend line. Go ahead and tag the point of June 4th, that June 4th low out at 1266.74. What you'll see as I blow this up on the chart here, you'll see that the S&P rejected that price, that area yesterday. So it gave you gave us an option here to see a bounce. I suspected that we would see a bounce. We had a high trend reading yesterday, trend reading about 2.4, I believe. Today's trend reading only 1.6. Typically, the following day when you have a trend above 2, you'll see some kind of bounce. Well, the bounce here was a flat bounce. It was a bounce to the downside, really stopping at about the 200-day moving average. Now, let's take, why did I say that the the S&P 500 would travel down to 1346? Well, let's go back and let's take a look here at a couple things. Number one, let's look at the retracement coming off of the October 4th low. So I'm going to come from the October 4th low to I'm going to use a retracement tool. And if you use retracement tools, you want to make sure that you've got 0.382, 0.618, 0.786 on your ruler out there. Go from the low of October 4th, 1074 and change, all the way up to the high that was put in on October 27th. What you'll see, I'll go ahead and put this in black here, you'll be able to see it, right around the 1158 area, that was the 0.618 retracement, is where the S&P moved back down into November 25th, the day after Thanksgiving. The actual low that it got to was 1158.66. Not bad, considering 1158 and a little bit of change was really what the 0.618 is. So that's the first retracement. I'm going to go ahead and delete that from my screen here as soon as I can. And now what we're going to do is we're going to take a look at from the low off of November 25th out there. So that was the next low that was put in. We're going to do a retracement from that low all the way up to the highs that were put in here at about April the 2nd, 2012. What you're going to see, 1259 was the actual 0.618. What did the S&P get down to? Well, June 4th got to a level of 1266. 1266 versus 1260, basically. A 0.618 retracement. Something to think about. Now, if we just simply go from the June 4th lows, we'll go from that low of 1266 all the way up to the high that was placed on September 14th out at 1474. You'll see that the S&P yesterday stopped at that 0.382 level, stopped at that rising trend line. Today went ahead and plowed on through it, thundered on down, the thunder and herd. Now the 0.618 level, 1346. So somewhere in that area, 1346, maybe it'll be the swing point low coming into July 25th out at about 1331. Maybe that's the area that it is going to move down to, but that is where it's headed. You've got 2.618s out there off of moves. I suspect we're going to see a third one out there. Now, if we go over and take a look at the Dow out here, we'll take a look at the Dow. The Dow closing out at 12,811. Well, you'll see here on my screen, just simply coming off of the July 4th low, all the way up to the high that was put in on October the 8th out there. You'll see how the Dow came slicing through the 0.382 level. That was the 13,040-ish range. 12,000, the number 12,656. That happens to be the 618 level. Now, that's the range. I would say that the Dow, you'd also got really a set of swing points, little area of support. I would use the July 24th level right around 12,521. So between 12,521, 1260, 12,656 is probably the area where the Dow wants to move to. Let's go take a look at the Let's go take a look at the New York Stock Exchange. We'll take a look at a little bit of strength out here. Why do I say strength? Well, the New York Stock Exchange, simply off of the June 4th lows to the highs. The high in the New York Stock Exchange was put in September 14th. Now, the New York Stock Exchange, a larger breadth of the market that's out there. You've got a basket of a couple thousand stocks that are trading. The biggest, the best. It's not 30 stocks. It's not 500 stocks like in the S&P 500. It's not 100 stocks like in the NDX. So this gives you a little bit better breadth of the marketplace. This hasn't made it back to the 0.382 level. That's why it makes it a little hard for me to gauge. Is this going to make it all the way back to the 0.618? Because if it does, the numbers that I just gave you on the Dow and the S&P and the NASDAQ, those numbers will be wrong. That means that those numbers, that you'll take a look at the Dow, S&P, and NASDAQ, those would have to go back to the June 4th level in order for the New York Stock Exchange to get back to the 0.618. Now, if we just simply take a look at A to B equals CD on here, we'll take a look at that, and this is going to be off of the October 18th high out at 84.70, down to the low that was put in on October 23rd, bounces back up, makes a high November 2nd. Just the 1-to-1 is 79.35. So I'd say 79.35 is really the first range that you would be looking at in the New York Stock Exchange. You're going to want to watch the New York Stock Exchange, number one, because it's the strongest index out there when we take a look at retracements as well. Let's go take a look here at now. Where are some divergences out here? Well, if we take a look at the euro, the euro right now trading out at 1.27478. You're going to see this little descending price line that it is traveling in here. On the 30-minute chart, we were taking a look at that on the show this morning. Still hasn't busted down. So there's a possibility we'll still get a little bit of a bounce here, folks. But if it's a bounce to sell. Might be a bounce to sell Friday, tomorrow. Maybe it's Monday or Tuesday. But there's going to be lower prices on the horizon. When we get back, we're going to go to Danny in Atlanta, take a look at the gold contract. 877-927-6648. Give us a call, folks. We'd love to hear from you.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.